Good afternoon, Scott Redler, T3Live. Welcome to today's recap. So, crazy day across the board. Not what momentum traders wanted, not what individuals like myself wanted, if you were trying to trade for a move above the 200-day moving average. A move for momentum, a move for continuation. And that's what's been the problem here, is that we're getting no continuation to either side. So when finally things look their best and everyone gets the most confident, that's when it seems as if everyone gets blindsided, and the same thing on the flip side. So for me, I know my thesis. Okay, you have to know yours. Mine was that in the next day or two, we could have enough pent-up energy based on how we've been holding in to get above 127, 127.20 on the spiders, and I'm going to hold the best stocks into that move. That's why I came in today with 8 to 12 positions. A lot of guys did the same thing. You followed along. Pre-market was that exciting move. After the jobless claims, people weren't sure what Draghi said. We pushed above 127.20, 127.40. And I was actually writing a note saying if we could hold above 127.20 for an hour, big time odds for 129 by the weekend before more news. And it couldn't even hold above it for 5 minutes. Not even an hour, 5 minutes. No commitment. So right there, my rules are I sell some. So, pre-market, even before it started pulling in, everyone's like, Red Dog, what are you doing? I'm like, I sell half into a big gap open. I sell half of my Google up $4. I sell half of my spiders, up $1. I sell some of my Bank of America, some of my silver that was, believe it or not, up 70 cents at the time. And then what I do is I wait to see for commitment. So if we held up for that first 30 to 60 minutes, I probably would have quadrupled up for a move to that area, but it didn't happen that way. So the plan was if momentum leaves, I leave. Because I know that I couldn't hold on to 8 to 12 positions into what could be a little bit more of a correction down to some of the areas of support, which I'm going to show you. If you're able to do so and you're trading for the next 3 months, you're trading for the next year, you probably did nothing today. Unless you were in like a tier 2, then you should have went down to a tier 1. So, granted, we're in a headline crazy market where if the market gets everything it wants to hear tomorrow, we could be up 300 points, and then that'll be just the frustration continuing. But there's nothing we could do about it. If you're a risk-averse trader that gets paid monthly by your P&L, you can't suck wind and go underwater like that. You have to trade what's in front of you if that's what you do. So if you look here at the S&P and the spiders, okay, this is what I'm talking about. You had this flag type pattern here. You also had a little bit of an uptrend, coming back all the way from early October that we broke. Okay, I sent this chart at lunchtime, and you could actually look at the blog. This is when I sent the note saying I'm getting out of most of my loose positions. I was basically out of all my positions but the spiders and the OAHs, and I said I would give it to that 124.97 going across. So that was my area, my line in the sand. I was playing for this. I was playing for a move above, continuation, 1292. Woohoo! Didn't happen. So what I do is I admit to myself that that thesis is not playing out. Granted, it might at some point later this month, later this year, maybe on Monday, who knows. But for me, short term, this got me out of my size. Okay, as far as longer term though, if you think about it, you put your Fibonacci retracement in here of this move from that Monday after what's called Thanksgiving to where we are. Okay, really a pullback of 0.382 is all that happened. Okay, 0.25 was breached. We talked about that earlier this week. So that showed some pent-up momentum leaving. And now we're really here. Okay, and at 0.382, this still is considered constructive. We could even go to 1214, the 50% retracement of this move, and still be considered, in the game for higher prices. And then obviously, this would be the 0.618, which would actually be the uptrend here of another higher low, a low, higher low, and that would be right here. And if you remember, the 61.8 is the one that held, after the last time we did the retracement rules. So the last time we put these retracement rules up was right here, if you guys remember. And you go all the way up to this area that was that high, and this is what held this time, that the 61, and then you were able to come back to resistance. So now what we want to see is which holds this time. Okay, will it be the 0.38? Will it be the 0.50? Or will it be this? And if it's this, we saw it work the last time. Maybe the market just needs more time. Okay, we're in an economy that's not going anywhere quick. Even if you get the headlines out of Europe and it's everything everyone wants to hear, you still have a contraction. You still have a recession that everyone's talking about. That's best case scenario. So why, I guess, would we just go, straight to the moon? So we might need to do more back and forth for this wedge to continue to develop and for this pattern to continue to change. But you have to just figure out if you're committed to it and how you want to trade it and how you want to deal with it. For me, I was in it. If we traded above it and had some momentum, I'm there. Okay, it didn't happen. Now I might be back in it. If we test the 50% mark, I'll try some there, maybe the 61.8, and we'll figure it out as we go. And we'll measure it with other stocks, other groups, and the headlines to figure that out. So if you go back to the chart again, this is what you should write down. You should write down this level, and then write down this one, and write down this one. These are the three. This is now support 1, support 2, and support 3. And obviously you have today's low. We saw, during this time period, how long it took to get to this one. A lot of longs and shorts along the way. So for now, this looks like a noisy chart to some of you, but if you could read this chart and you can understand what I'm talking about, you are making progress because you're learning how to read the technicals and read, the signs. As far as some of the other positions, that I was in, they still look decent, but, they're not as compelling as they look. Guys are like, why'd you get out of Google? First I got out of most of it, up, which was good because then I was figuring out. Just, you look at Google and, again, I was in it because I said as long as it goes and hovers above the 618, I think there's a lot of pent-up energy for a move through the highs of the year and then some. And I do still think on a weekly basis, monthly basis, stock looks unbelievable for 2012. 2012 is a long year. So short term, which is what I trade from the low here, to a higher low to this is your first red bar. Google could pull back to 593 or so. So I know I'm not going to sit in there and hold it. That's not what I do. Okay, if you do that, that's fine. You're allowed to. So on the daily, as this leaves this support area and tails into it, I get out of the way and then I'll figure it out. Look at the size of this move. So if you want to even do the retracement levels here, you go all the way up to the top, of this most recent move, Google could pull into 605 and still only be at the 0.382% retracement, and that is another 11 points. So for me, I'm not going to sit in 11 points because I know I could actively maneuver it, hopefully, if we get this set up. And the 50% mark is right here, 597. So for me, the momentum of this upper flag leaves, I leave with it, and then we figure it out as we go. For you, if you're a macro trader and you're in it for a big macro move, you don't have to do that. Apple tried to be strong today, and then it gave way. Won't get into it, but we'll see if it's strong tomorrow. The chart looks a little deceiving here because, it did, give in at the end of the day. So we'll see how it transpires tomorrow. It definitely tried to be strong. It was a good morning trade. That was my actually only really good day trade. If you take a quick look at the 3-minute, you'll see, it gave you a nice trade. This was my trade right here. Okay, if you want to take away the macro picture, take away what's going on in Europe, take away what's going on around the world. But you know what? Gap up, futures were heading lower. Apple was hanging in there. This was a nice day trade through 393, all the way up to about 396. So right there, here's your cash flow trade. That's why I say either you trade for cash flow and come in flat, which you can do, which Mike Lee does, which is what I did for about 12 years or 10 years, or you hold things longer and you have to deal with the stress and the pain of it. But then you also get rewarded when you get a week like last week when you're up 8% and absolutely none of it was done intraday. So don't get mad at things that you can't do. But for this day today, that was good. As far as like MGM, I got stopped out also. Chart, I was looking for a breakout above 1050, a momentum trade above this area through this downtrend. And you know what? It tried and failed. Okay, maybe it'll try again another time, but it failed here, and it just engulfed this 5-day range, so I get out of the way. Figure it out again. LVS was weak early on. That actually gave me a little bit of a clue also. Remember, I drew this descending channel, hoping that it would break to the upside above 45. You know what? It didn't. It broke to the downside. And now, it's back in this channel. Maybe it'll hold this 42. Maybe we'll look at 40. But as of right now, it's still in this overall crazy long, just upper wedge consolidation. It's done a whole lot of nothing. You guys remember this time? It was awesome. We rode it from like 18 all the way to 40 or so. But anyway, still in this long channel, still looking for clarity, still not a macro trade yet, but you could be holding it on a macro level. Some guys won't even micro trade it, they're in it, and this is their channel, and there's nothing to do if that's your time frame. If you're micromanaging it, there's a lot going on in here, and there's a lot of money to be made and lost, but for right now, not really compelling. You know, the banks, great trade for the last week, and then today they were finally weak, they got hit, and we talked about it with Jill. She hated Bank of America, which, you know, the flag that I saw broke to the downside. You look at the Bank of America flag, you know, actually if you look at this chart overall, still so weak, but on the daily, I drew this little bull flag, said, you know, if we continue to hang in there and go, perhaps we break higher. You know what, it didn't happen, we broke lower. This trade is different now. Goldman Sachs had a lot of good setups, and you know what, it just negated yesterday's big area. If this stock was strong, it probably wouldn't have came back below 102. That's why we were talking about this 102. Sperling was trying to buy 102 because if we were in a momentum strong tape, okay, it would have, after a big move, it could have broken through, retested, held, and then continued higher. It came in, didn't retest, but it held, you know, the bottom end of this flag. So maybe it needs more time, or maybe this now is your new line in the sand to trade long and short verse right here. Okay, and then if that were to break, we'll see what the story is there. But right now, this takes a little bit of the momentum off the trade. As far as the OAHs, they've been really weak. You know, OAHs tried to hold for a few days. You know, actually, it's a good, you know, train of thought because I've been trying to be long it, not based on the price action, but based on Stephanie's fundamental thesis, which could definitely come into play next year, but for right now, it's not. So for me, I can't handle it, so I'll wait till I see a setup that's worthy of my attention. So I had to get out of my OAHs. If you look here, you know, this head and shoulders pattern is still intact, right? Left shoulder here, head here, right shoulder. This is still intact until it breaks the right shoulder. So, you know, it's still there on a macro level, but on a micro level, this actually was the first ETF or group to fill the gap. Look at this. OH has filled the gap, showing relative weakness, because if you look at the spiders, it's not even there yet. So right there, the OAHs at this point are leading us lower. OAHs filled the gap, which I just showed you, which would have been the spiders getting down to here. So that means right now that group's a lot more relatively weaker than stronger. You know, whatever the fundamentals say, you know, at this point, it's to me, it's not a long yet if you're just a trader. If you're in it for macro tier 1, that's all you should be. And then have the low of that right shoulder as your stop. As far as, let's look at retail just as a sector. If you were in this for momentum, right? If you were trying to trade the RTHs to break out, go above, you know what, you got stopped out today. But if you're in it for the longer term, you know, if you look where it is, still, you know, just fine, right? One down day, no big deal. It could come into here and be fine. It could probably even come all the way to 110 and be fine. But if you're playing it for momentum, if you were playing it for new highs, if you were playing it for a strong close into year end, you had to let some loose. So that's why you have to know what you're playing it for. Gold. You know, I was long silver overnight. Sold some on the pre-open, and then it went negative and couldn't bounce. I got out, and now it seems like that tight wedge, which I thought would resolve to the upside, is in jeopardy to the downside. Okay, have your plan. Wait for the market to confirm it. If it doesn't, get out of the way, and then try and look at the other side of the coin. If you look at GLD today, you know, I wouldn't say it's over, but I drew this line because that's the way it seemed like it was going to be this morning. If it went above this downtrend, if it closed above this downtrend, and it did not. It actually engulfed the last 2 days, showing power to the downside. So I would think if you had to be on a short-term level, long or short GLD, it's probably short. And if it breaks this area, you know, then you have this support, but you know, it got rejected at this downtrend. Okay, so then you have here, and then you have this longer-term area that we talked about before, but that's a rejection. If you're playing it for momentum to go to 175, it didn't happen, you get out of the trade. Okay, if you look at SLV, same situation. This one actually seems like, remember I drew this little line, if it broke this downtrend, which has been controlling it. The reason why we love downtrends, because when it does break it, everyone who's been shorting into this has to cover. Everyone looking for a higher move goes after it. You know what, it didn't happen, and now we'll see what happens to the downside, because everyone buying it on this uptrend, you know, if it starts to break it, they go, uh-oh, this has changed, maybe it continues. So that's why we watch these patterns really close. And you try and anticipate, but you don't get stubborn. Because if you anticipate and get stubborn, you know, you'd still be holding silver down probably 5 to 7% in your mush. You know, now it looks like it's going to, you know, go back to this area, especially if gold starts to break down. So a lot going on. a lot of different ways to read it, the charts on a micro, macro basis. It's really hard when you're prisoner to the headlines, and every time the headlines changes, the market somewhat changes. So in that type of environment, you do less. You don't be a hero. You don't have to be the winner of the game. And a day like today, first down day, breaking the upper level, I'm not looking to just buy. Maybe I buy versus the level. Actually today, shorting that first rally up, in a trend down day was a day trading rule, not having a thesis, and then, obviously that news out of Germany helped, but you made 70, 80 cents. So it's, the short-term rules still take place, but if you're trapped between worlds, it's going to be hard for you to execute and hard for you to make money. So, again, with this environment, a little less is more. There'll be headlines out to kazoots tomorrow. We'll try and figure them out. Unfortunately, I think that, most of the stuff's going to happen over the weekend, so we'll have some decisions to make, but we'll deal with that tomorrow. Today, a lot of guys were like, you must have had a frustrating day. It was a tough day. You okay? I am fine because I followed my rules. I came in with, I think, 8 to 12 positions, and if I would have held every single one of those positions and held my nose and went underwater, I'd be down 8 to 12 times, about eight times more than where I finished down because I salvaged a trade. It didn't make sense. Push through failure early on. Didn't hold important levels in the first hour. You want to take a look one more time back at the spiders. Go to the spiders, and you know the rule. If it can't fill the gap in the first hour, typically it stays in that same direction. So if you look at the spiders here, okay, here's this is from yesterday. This is where we closed, and then we gapped down. And then this is one of Laz's major rules, right? If you gap down in the first hour, you can't fill the gap, meaning people had a bargain here, right? This was a bargain. Yesterday you had to pay up 126.60 for the spiders. Today you're getting it on a bargain price below 126. What do you mean you don't want it? That just shows you the weakness. So if you came in flat and saw this, there were some nice short setups. You could have shorted, right here on this break. It came up, retested, and then 125.20 was a level. But for me, since I came in long, I had to do something different. I had to say, if we don't start filling this gap and I don't see strength and things turning green, I better get out and salvage a trade and then run for the hills. And by right around this time period, I was almost flat. And then I got fully flat once we broke that 120. What was it? Yeah, it was about 124.75. And then I said, I'm done. I'll live to fight another day. And this is what is where we closed for now. And then we'll see what that next day is. So with all that said, Thursday night, it's still the holiday season. Don't let it get you down too much. Hopefully you learned from it. You didn't get too hurt. And there'll be a lot of action in the next day, coming weeks. So you can get it back. You could stay on course. But if you get frustrated and stubborn and you blow yourself up, you won't have that chance. Go out for some happy hour, have some drinks, or go home and kiss your partner and play with your kids. Do something to make you happy because tomorrow's another day. Scott Redler, T3Live, The Recap. See you at the morning call. Have a good night.